All right, let me just go over all of this really quick. I was doing twos. All right, so this is the low. Market was going down. This is accumulation range. You don't know it after this move up here. By the way, this is the Dow. This move up here has the biggest volume, price volume, 29 waves. It's a strong breakout right above this high. It has all the markings of a breakout range. Why? Because it's a range. It has a high volume breakout. It has a little follow through. It has a minor pullback. And here's something very important that you have to understand. This here, this little bop, this little high right here is actually a higher high. That is a higher high and it counts. Okay, so you had this range of accumulation, then you had this rally breakout with the high volume, with follow through, with a nice little pullback, with a little wick higher high. This is not an upthrust. This is a wick higher high. It is just a higher high, and it is bullish. It's a probe to go higher. Then it sets up the pullback. All right, here. Oh, shit. To test. Ding, and market flies. What a point about this accumulation range. Accumulation range here, right here, I have no clue what it is right here up to this point. Then as we go forward, right here is a key indication. Because can you tell me, why is it that you have all this volume, biggest volume in 100 bricks, and it does not make a lower low? It doesn't make a lower low. And on top of it, there are multiple attempts at that same level which are holding. So this means they're buying. This is effort. That effort reward thing right here. Then after that, it breaks out. This volume is the biggest volume in 100 bricks. It's even more than the last one. And then it has follow through and it has a higher high. I mean, there's a bullish, bullish, bullish all over the place. And this is what this is telling you is the market is in markup. And it marks up. And when it comes up here, what happens? Right there, let me get rid of all these rally. Right there, what do you have? You have effort, but it's not really. If Wyckoff would describe it, he would describe this as a climactic bar. Okay, this climactic bar, it does not hold. The key element to distribution is when you have a lot of volume in a bar or whatever, and it doesn't hold, and the market goes against it. Because if this is strong hands and it's bullish, it should be able to hold. It doesn't. It reverses. So this is not me. This Wyckoff explained in a study that one of the studies he explained that a market goes up, it has extreme high volume and its inability to hold, and very soon after the market goes lower, breaks. That means it's an element of distribution. And you know what? So I took that and I reversed the logic and said, you know what? This went down and immediately reversed and reversed a lot more. So this must be the element of accumulation, right? Because I'm unable to hold. And that nice follow through down on biggest price volume in the 21 waves and 49 waves indicates that this up here is distribution. And then bing bing test and goes down here. Unfortunately, I don't know what the hell happened. We missed this one, but okay, whatever. Okay, this one was a entry. And here's the another learning. All right, so I explained the volume at the top, volume at the bottom, and how they connect to accumulation and distribution. But I also want to explain that the entry here is critical, because the entry here, right, a lot of traders are going to be entering where? They see that ICE has been tested, right? So they're gonna enter right here against this 5, this area right here, because above that has been tested, right? So around here is when they get stopped out. That's the problem. You don't think the thought that will come to your mind, and this is more important, especially when you're at the point where you have a system and you're trying to be consistent and disciplined and all that, is as the market goes down and down and down, and by the way, crude is puking, right? You do not think after it makes a low and another lower low that it's going to make a high and another higher high. But it does. But what's going to go in your mind is either I should sell here, right here, or I should sell after the rejection. When it tests the area right here. Or let me wait for the upthrust and I'll sell that. If there is an upthrust, if you're looking for, some bar action or whatever. So it takes out this high with this break right there. There's your upthrust. This high was upthrusted by that high, immediate reversal. And let me put the stop here or a risk-based entry. Everybody got stopped out. So never think that the market cannot go all the way back and test. It can and it will. One indication of the likelihood that it would do that is if, as it goes down, it tests an untested breakout level right there. You see this 20? This is the biggest volume in 41 bricks. That is why the market rallied this much. Because this is untested. It went to an untested level. The orders are there to go long. Untested, high volume breakout area. Got tested. They're going to get their piece of the pie. And they do. Before the shorts say, you had enough, we're going to defend, and they go back down. So you got to keep the untested breakout levels in the back of your mind when considering entry, because those untested breakout levels went on the way down will be tested and will set up the pullback to go short. And if they're untested high volume areas, chances are there's a lot of buyers there, and it will be a much deeper pullback, as is the case here, where it goes all the way back, and then goes down. So so I went over the untested breakout level. I went over the climax. I went over the distribution, that because climax cannot hold, climax bar cannot hold. Volume off the top, boom, done. Went over the, same thing here. I went over the high volume breakout, and I went over the test. And from psychological perspective, being ready and thinking that it can't go back, if that thought comes to your mind, first of all, you have to be ready for it. It can't, if you think, oh, this move is going to go, it's because you're being driven by FOMO. And if someone is looking at this market and they're looking at that other crude market, for sure they would have entered on, either breakout right here, the breakout right here. Right, this is a breakout, biggest volume in about 7 bricks under the low. They would have either entered here or entered on the pullback against this reversal bar or this upthrust or whatever. Right? So anyway, long story short, there's a psychological element, and that element is tempts you. It tempts you through fear of loss, having a losing day, fear of missing the move, and also trying to be perfect. And trying to be perfect is trying to get the entire move, like some ridiculous move that goes into a higher time frame rally or something like that. All right, so anyway, I'm done with here. Let's move on to the next market. All right, now this market is a, where the hell I saw this? Can't recall. Anyway, this at first I thought it was bullish because you had, and this just goes to show you that there's no system that's perfect. I mean, you know, if you're thinking that, then you really good luck to you. All right, but here's was I was thinking that this was your some type of volume off the bottom, right here, and this was like a little base with a spring here and a spring here. So I thought that, okay, this is a volume off the bottom. They're buying, buy some more, spring it up, high volume buying right here, biggest in 8 and 8. And here you have some type of higher high confirmation. And then you have a pullback, and now you have a rally. And now, you know, you clear to enter. But what happens is they rallied to resistance. They rallied it to the resistance, from which came heavy selling. So when you have what looks like confirmation or trend or rally or all the stuff in the background, consider the possibility that it's just going to an area from which to sell, that it is a counter trend to go to an area from which to sell, and this is the evidence of that selling pressure. Biggest volume in 15, right? And the biggest wave in, I think, 15. So I really screwed this one up. Because I thought this was a spring, you know, and I thought that it had a high probability of working because it was spring. You see how it sprung this low and then rallied, right? It sprung the low, had increasing volume 10, which is bigger than 3, 4, 3, 3, 1, 3, 2, whatever, 2, 5, 8, 2, blah, blah, blah. High volume, right? So I thought, okay, oh shit, you know, they're ready to go. Get in a pullback. Has a lot of elements of accumulation, has elements of rallying, has elements of trend. You know, it has a spring that creates the rally, which is a very bullish. When you have a spring, the market goes down and then goes up. It's a very bullish situation, but it didn't work because of whatever reason. I don't know, but it didn't work. All right. They tried. It tried once. It tried twice. It tried 3 times. It tried 4 times. But they're just too, you know, not going to happen. Not going to work. The demand just wasn't there. It may have also been because of other reasons, like it was high or whatever. But anyway, it just didn't work, and it didn't work, and it didn't work. That's it. Done. Boom. All right. And then it just, the puke fest began. So this underlines 2 things. One, no matter what your system is and how much volume and this and that, the trade can fail because new buying or selling can come in at any time. Okay, this here looked bullish and the background was bullish, but in the present time, someone sold it heavy. They sold the attempt to rally right here. So it had all the makings of taking out these highs and continuing higher. Someone saw that and said, you know what? I'm going to sell. And they sold the attempted at markup before it could mark up with heavy selling. Doing what? Negating the attempt to mark up. The other thing I want to show you, look at the volume here. This wave has 2,600 contracts. When it went to resistance, look at how much volume came back down. Lo and behold, 2,600. What are the chances? Did someone change their mind? Did whoever buys sell? So this is I think like whoever bought knew something, or they were just trying to take it to resistance. But that behavior there of buying 26 exactly and then selling 26 exactly, you know, and then breaking the market like that, that is a little fishy. After that goes down here, and that's about it. All right. So, all right. So the lesson here is no matter how good you think your systems are or this or that, get ready for for it to fail on a couple of trades, and that's fine. That's what stops are for. All right, that's what stops are for. And it doesn't matter how much volume or whatever. Oh, and the other thing is, after the market rallies and confirms and all that, look to see if someone is selling the rallies. Is someone selling the rallies? In this case, they're selling the rallies as indicated by the high volume selling, which is the biggest down wave in 15 waves. That to me says red flag. All right, next is gold. I cannot read this shit for my, I don't know what's going on here. There is one clean indication, not clean, but good enough. Is here. Up thrust, heavy selling pressure, makes a lower low, test and goes. I mean, that's the only thing I can see. Back here, it was testing. So, I mean, it's at a critical position. All right, it's at a critical position. I can't really see this high was taken out right there. Comes back to test. Okay. A little choppy action. I don't like it. Right. So that's the biggest, this wave, breakout wave has the biggest price volume, biggest volume 13 waves, biggest price in 7 waves. Goes all the way back, tests, rallies on the biggest volume 17 waves, comes back down, rallies. It's like a little too choppy for me. I don't like it. You know, I don't know. I can't really see this shit. So let's go next. All right, now this is copper. Son of a- All right, so there was a little trade. It's a little challenging, right? And it didn't really come back all the way to test. But over here, you see the selling, you see some volume over here pick up. So there's some buying here. There's some buying in this base. Buying right there, goes up, makes a little higher high, biggest volume in 22 waves. Then does a spring. Ooh, where's the spring? Anyway, does a spring. Then comes back on the biggest volume in 49 waves and biggest price in 13 waves. Then biggest, this confirmation higher high. Clearly we're in trend. But it just didn't pull back enough. I just needed one more brick. And yeah, I didn't do it. So whatever. 1, 2, 3, 4. No, I didn't do it. So then and it's fine. It just made a minor it was a small move. Small move. And then what happened? Right there, you have your climactic bar right there. Oh shit. Right there. Right, you see that? And what happens? Breakdown. So, like I said, smart money knows the highs and lows. I think they create the highs and lows. Or they know the highs and lows and exactly where to buy and sell. They're buying the low, just did a spring off of it, they sell the high and pukes. So it's a small move, nothing spectacular, but a move nonetheless. And the other thing is this: after this, it didn't really go back, and it was let's see, it's about a 3 hour, you know, nothing spectacular. All right, this one is also a little hard. And like I tried to explain before, it doesn't matter how good you think your system is. You know, new buying and selling can come in at any time. In this situation, you have volume off the bottom right there. So it just means that volume of the bottom just means a buy low. That's all it is. Volume of the top means a sell high. All right. So volume of the bottom, buy low, makes a nice rally, pulls back to test. But you know, as soon as it rallies up here, I forgot what I did here. Anyway, yeah. So as it does this, goes up, down, attempt, it gets stuffed at resistance. It was about to break out, but it gets stuffed because the entire energy market got hurt. And then after that, first of all, what you want to make sure that you should really, really know is when you're looking at your rally, it has 25 volume. When you're looking at your pullback, it also has 25 volume. So that's your first indication. It should not be balanced out like that. All right. Now, after that, it was a low volume wave, and I thought it was ready, but someone just sold the rally attempt. So understand that when you have accumulation and you're entering markup, it is possible that someone accumulated only to get the market marked up to a particular level to sell it. Okay. And it is also possible that they want to accumulate in order to mark up a little bit. All right. What is it? Not just sell, but it's like a test or mitigation or whatever. So it's just a little move, right? So here, volume at the bottom, rally again, attempt. It does not give you confirmation higher high, but even if it does, it's possible that instead of marking up, you know, when you move from accumulation to markup, that the rally is sold. Just like what we saw in crude, where the rally was sold, right? And on increasing volume, this 27 is bigger than the 25. And I think it's a bigger price move to more bricks. This has 4, this has 1, 2, 3, 5. So basically it failed. Now, again, it attempted to rally up here. Sell it and break it. So there was a nice little opportunity to get in by then, right here, against these guys' position, right? Right against there, ding, goes down, but it's not a spectacular move, but move nonetheless. And how much is this? 1, 2. Nah, it's like 2.66 R. Anyway, so this is where it failed. You have this, you have this. It didn't make a higher high. If it doesn't make a higher high, don't even think about it. And the other thing is, even if it does, you're always susceptible because here's the fact: buying and selling can come in at any time. And what that means is as you're entering markup, as the market is rallying, as the uptrend is being created, someone can come in and just sell. And that's what happened. You know, they sold the markup attempt because one person is accumulating, one group or whatever is accumulating. The other group says, okay, we have more. Let's sell it. Let's sell this attempt to go up. Now, there's one other thing I'm going to explain here. This is really important. You know, a lot of times when you're looking for confirmations or what you think is confirmation, you know, yeah, a lot of folks are taught this, that, you know, higher high confirmation or lower low confirmation. But this is not what Wyckoff explained as the best entry, or what he said was the time to get in. Meaning, his approach was a little bit different in that between the first high and the confirmation of a higher high, or basically trend confirmation, right? Because that's what it is. Confirmation means trend confirmation, right? Between the high and the next higher high, trend higher high, trend confirmation, there's a spot here. That spot will be a very low volume pullback, and it will be it will be low volume and small distance, meaning it's a little wave. That is what Wyckoff said to trade. As soon as that little wave occurs and there's a reversal, hit it. In fact, this is termed, I think he termed this, was this it? I think this is one of the, this was the example, he said. It was actually on the short side. Basically, the market was doing this, right? And it got exhausted here. This was your climax, so it was exhaustion. That's what he explained. And then there was a small wave right here. It was so small that it was smaller in distance than all the other waves, like at least 4 or 5 waves in the background. That was the place to short. Okay? Not after the confirmation. Although he said that if you miss this, then you can take it here. After the confirmation. As long as it's a small and weak wave, a shallow and weak wave, your opportunity is here and your opportunity is here. So he was interested in watching the pullback, and the pullback confirmed the exhaustion. And in the middle of them was a strong selling wave. You can call it your sign of weakness, or change of behavior, whatever it is that you want. So it was a pullback after that sign of weakness. That was a weak and shallow pullback. And as soon as it turned, he went short. And if you miss it, then after the market goes down and it pulls back up, and there's a weak and shallow pullback and it reverses, he was short. This is the 2 entries, the short entries that Wyckoff talked about, and they would occur after exhaustion and a sign of weakness and either a small pullback, a very small, it is actually called lack of demand. So when he had these elements of exhaustion, sign of weakness, and lack of demand, right? And then it reversed, take the short. All right, so those 3 elements. Now, why I mention this is because there are many, many times where you're taught, like, okay, it goes to, markets like this. It goes to a POI, a level, of order block, a zone, right, or something. And then you look at 1 minute, and on the 1 minute, you see this, right? And you think that this is some confirmation, right? First thing to note is this lower low confirmation, trend confirmation. It's not just 2 lower lows. Okay, there are certain qualities of this wave and the following wave that would make this work. The second thing is when it pulls back, this wave right here is your springboard. So why am I mentioning this? Because on the long side right here, when you have a high pullback and a higher high, many times you are not going to get that entry. The market will just do this. And it does not give you that low risk entry. It does not go here. So the only way to handle this situation is to get in here. Instead of after the confirmation, there is another spot which is also confirmation. The confirmation that I explained is typically trend confirmation of a higher high. But there is another confirmation spot which is before the higher high and after the initial rally. The pullback confirmation. That pullback confirmation is critical, because that's the only way you can get in with much more certainty. Because after the higher high trend confirmation, the market's tendency to go back down is significantly reduced. It does happen, and yes, but you will miss a lot of trades, and I have missed a lot of trades because of that. So the other confirmation is the confirmation that is called lack of supply here, or in a short situation, lack of demand. Lack of demand and lack of supply themselves, after they occur and have a reversal bar, are also confirmation. What are they confirming? They are confirming the exhaustion that is occurring and the weakness after the exhaustion. So if you have this is exhaustion. Right? So this low is exhaustion. The low after that is going to be low, a small wave. If you have volume, it will be low volume. And in the middle of that, there will be a sign of strength. So that strength plus that weakness, which validates the exhaustion, is a form of confirmation. All right, I'm done. All right, thanks, bye.